Markets are up for the end of the week, the U.S. ending the day higher, thanks to gains in the tech sector. For more on whether this could be the start of a Santa Claus rally, let's go to Kim Forrest, founder, chief investment officer at Bokeh Capital Partners. Thanks for joining us today.
Thank you for having me.
Why is tech rebounding? Is this Micron reporting that's sort of resounding?
Micron, and then the whole TikTok news where Oracle is getting a piece of it. And, for services, not just, a gift, but they will be getting some of the revenue for hosting it on their, the American version of TikTok on their data centers. So all of these things point to more and more data centers being built. And the report that Micron gave was really encouraging with respect to what its pipeline is. Now, this all could come to a grinding halt for whatever reason if we decide that we don't need these data centers. But as of now, it looks like we are all steam ahead for the data center revolution.
Has this signaled, you think, perhaps a mood shift for the end of the year?
It has. There were real fears coming in as people did the math for OpenAI, for example, that its revenues are pretty impressive at $20 billion, but it's committed trillions of dollars for data centers. So that math doesn't necessarily add up. And I think with the competition heating up from Meta as well, that Gemini is a much better product than it has been and is really breathing down the back, or maybe even has exceeded what OpenAI can do. This really gave investors some pause about how many models are needed and, who's going to pay for them. So that was the concern earlier in November, and we've forgotten it all by these really good numbers by Micron and some other announcements.
So let me ask whether you like Micron long-term as an investment. Are there other stocks you prefer for 2026?
Sure. Well, I'm going to hold on to Micron for sure. And, it's a volatile stock and it's a cyclical stock. Now, what happens generally is there are few players in the products that it makes. It makes two of them. NAND, which is it used to be the kind of memory that goes in a camera or, a little dongle that goes off of a computer, or DRAM, which is it's memory that goes on a server chip or a CPU to help usher in data to the processor. And both of these things are very cyclical, but they're cyclical for a great reason, that there's a handful of makers of these products. And they all seem to add capacity at the same time and all seem to overproduce, and that makes the market go down or the price of their products go down. Well, this time it could be different. Everybody seems to have a different high bandwidth product as opposed to it being more commodity-like. So I think for the foreseeable future, which is months, not years, it's probably a good idea to hold on to Micron if you have it, and maybe take a look at it if it would dip for whatever reason.
Nike, of course, reported earnings. Investors were not very happy. What are investors seeing there, you think, that they don't like or that they're not appreciating the attempt to turn around?
Sure. Well, investors are time conscious, and, Nike's been having problems for almost a year now, and they don't seem to have made progress. And this is the big quarter in which they should have shown some progress. This is leading up to the holiday season, where it's vendors that purchase its products and sell, like sporting goods stores and department stores, should have, seen a good pull through for them. And it wasn't necessarily a great year for that. But really, an area of disappointment was China, and that was down by 10%. And anytime you're down in a region as important as China is, 10% is really far. So investors were very unhappy with the company, and they don't seem to have answers about how they're going to turn it around.
Okay, I do want to skip to what you see for next year. Are there themes in investing that you are kind of adhering to for next year?
Sure. Well, we usually have a pretty long timeline, like 3 to 5 years. AI is still going to be important. And I am, this is going to sound crazy, I'm not a believer necessarily that LLMs are AI stop period. We don't need to do any more development. I think they're very interesting. I certainly acknowledge that they help, large language models help people ask questions of a computer much better than we do in, say, Google or do a search on any other kind of search engine. But I don't necessarily they are the thinking machines that people are really believing that they are. So I'm not thinking that LLMs are going to take over. What I'm looking for is the time of the smaller models, targeted models, and it could be language models or other kind of models that are solving discrete problems and that add high amounts of productivity. As of yet, we're not seeing tremendous amounts of productivity, largely because the models aren't all that right with the data they return. But it will improve over time, but I'm still looking for a different kind of theme coming out. But until then, we're going to keep on going with the tech theme.
Okay, I will leave it there. I appreciate you joining us on the show. We have Kim Forrest, founder, Chief Investment Officer of Bokeh Capital Partners.